Staggering food prices will be the target of a G20 meeting in Paris. A new UN report says high food prices are likely to rise even further over the next decade. And it's the poor who will be the worst affected. So what are the reasons and what can be done to prevent the crisis? This is Inside Story. Hello and welcome to the programme. I'm Jane Dutton. As food prices soar, G20 agricultural ministers will gather in Paris on Wednesday to discuss what can be done and to explain the creation of an agricultural market information system. Now, this meeting comes after the release of a new joint report by the UN Food and Agricultural Organization and the Organization for Economic Cooperation and Development on global food prices. The report has concluded that global food prices are likely to increase over the next decade, putting the poor at risk of malnutrition. It projects prices for cereals could jump as much as 20% and meat as much as 30% in the next decade. The joint report also warns that droughts across the globe could have a serious impact on harvests. Rising food prices will impact on agriculture, food security and even the wider economy in both developed and developing countries. The report says there are several reasons that would result in these prices rising over the next decade. Weather and climate change, stock levels could be another reason. So when accessible stocks are low relative to use, prices go up. And energy prices, including oil and gas, could also keep the food prices high. And exchange rates could affect domestic commodity prices. Currency movements have the potential to impact food security and competitiveness around the world. There's a lot more being blamed on those staggering food prices. Joining us now to discuss this are our guests in Rome, Abdulreza Abbasian, economist at the Food and Agriculture Organization of the United Nations. In Paris, Marie Brill, she's a senior policy analyst at ActionAid. And in London, Michael Hewson, he's a market analyst at CMC Markets. That's a UK-based financial derivatives dealership. Welcome to you all. Mr. Abbasian, you are closely affiliated to this report, I believe. What struck you the hardest with its findings?
Well, you know, the issue of the prices being high is one. The issue of prices being very volatile is another. And that is really what I think we're trying to address here. The issue of the volatility that has been with us now for a couple of years, it may even intensify further in the future. As far as the prices are concerned, we do expect prices to remain high, not necessarily higher than this year, which was an exceptional year, or in 2008, but compared to the past 10 years, let's say.
Ms. Prell, were you surprised by anything? Did this all ring true to you?
Absolutely. I think the report is a strong one, and one of the pieces that I think contributes to this rising prices and volatility that you didn't mention initially is the role of biofuels, the reality that we are burning food and feed that's needed to feed a growing and wealthier population for fuel for our cars, which is one of the opportunities that the G20 agricultural ministers will have tomorrow to make a difference on this increasingly volatile food prices.
Okay, I would like to talk a little bit more about biofuels a little later on, but let's stick with the prices, the rising prices. Mr. Hewson, I guess this is no surprise to you, considering that you are linked to, who are seen as the bad guys, the speculators who are pushing up these prices.
Well, we're not exactly speculators, but I mean, you know, people talk about speculators because I think they're a convenient bogeyman. I think when you look at food prices, as you stated earlier, you talked about supply and demand and the fact that seasonal factors affect commodity prices and always have done. But I think you also have to look in the context of monetary policy of Western central banks and governments as well. You've got very aggressive growth in emerging markets. You've got an emerging middle class coming out of China and India and other South American countries, which is obviously there's a big demand from those emerging economies, and you've got a lot of liquidity sloshing around in the system. And 2 years ago we had a financial crisis in 2007, and the Federal Reserve and the Bank of England pumped an awful lot of money into the global economy and drove interest rates to record lows. Now that money's got to go somewhere, and I think it's very I think it's extremely convenient to blame speculators, but if you actually look at the stats over the past 2 or 3 years, there's also been a lot of natural disasters that have helped drive food prices higher, which has obviously impacted the supply chain. So I think it's a lot of different factors that have pushed commodity prices to the highs that we saw in 2008 and the highs that we saw last year.
Sure, and I guess if there are no real areas to invest in at the moment, commodities are rather attractive. Tell us how the markets will deal with this and how speculators make the money off it and what is being seen as so offensive from the outside.
Well, essentially what happens is you get asset allocation, you get capital flows, you get rotation of capital out of areas that aren't making any money for these people, and they look at other areas. And obviously, if cash accounts, deposit accounts, have zero rates of return, you have inflation running at 5 or 6%, investors, to basically top up their pension funds and their hedge funds, are going to look to try and enhance and make best use of the capital for their clients. These big pension funds aren't in it to speculate for their own sake. They're in it to grow the pension funds of their clients. Now, they need to make the best use of that capital as possible. But if you actually look at the capital inflows into commodities, CFTC stats stipulate that speculative inflows into commodities are a very small fraction of the actual supply and demand in terms of asset allocation and capital inflows. The rest of it is very, very seasonal. Natural disasters. Last year we had the fires in Russia. We had the export ban in Russia. And there isn't enough agricultural land to go round to basically supply the increasing demands for corn, wheat and oats and all the other commodities that basically make staple foods.
OK. The French President, Nicolas Sarkozy, has said that access to food in many areas will likely become more precarious over the next decades, and the markets will have to be more tightly regulated to avoid massive shortages. He continued to say speculation, panic and lack of transparency have seen prices soaring. Is that the world we want? France is saying quite clearly that it isn't. I mean, Mrs. Brill, you are in Paris at the moment, ahead of this G20 meeting. What sort of restrictions will you be seeing imposed on these markets? What sort of restrictions would you like to see?
Well, I think, unfortunately, actually, we won't see much in terms of restrictions on the market at the meeting that starts tomorrow. They've been very clear that in this G20 process, which will last all year long, that the details of how to regulate the market in terms of commodity speculation and over-the-counter trades, position limits, some of the very exciting proposals that have been made will actually be decisions made by finance ministers, not by the agricultural ministers. So I would expect the action plan coming out on Thursday would give mention to interest in watching the market, perhaps even mention of regulation, further regulation, but that the details of that plan will be worked out by the finance ministers in October, closer to the time of the Global Leader Summit.
Mr. Bassian, what would you like to see?
Well, as has been said, I mean, the speculators are just one of the elements, one of the factors, but the studies show that they are not really behind high prices. What they are behind is price fluctuation. Prices do fluctuate more intensively, as we have seen, because of a lot of speculative money. But then you have to see the source of the money. And again, I must say I agree with the fact that with a lot of the liquidity out there, you're going to see a lot of liquidity coming and leaving the market and making it very unstable. It is very likely, in fact, as was mentioned, that the overall issue of speculation will be more of an issue for finance ministries rather than the agriculture ministries. But there is still a lot that I think the G20 has been able to achieve in dialogue and discussions that has been taking place now for months. And really brings us to one important issue. It may not be regulating the market as it was first thought about a few months ago. It will be more about actually trying to come up with better information about the market. Better information about the market.
Yes, it's transparency that's essential, isn't it?
Yes, that's right. And that is, I think, the speculators are there to make profit. They make profit out of basically other people not knowing what's going on, or the market that is basically very volatile because there are a lot of factors in and out. So if you make that market more, let's say, transparent, you basically will see, in fact, a reduction in the speculation without putting, let's say, very strict regulations here and there. So I think this is sort of like a transition. We should really look at it as a starting point, and I think it's a very healthy starting point.
Mr. Hewson, do you agree with that?
I certainly think more transparency wouldn't be a bad thing. Most definitely not. But I think what G20 ministers have to get their heads around is that the supply and demand aspect of this question. They need to set aside more agricultural land for to grow crops. At the moment, there isn't enough. Farmers in the US are basically having to make a decision with respect to whether or not they set aside their fields for either wheat or corn. And that can't be a healthy situation, because if you have a situation where you've got a lot of wheat and not an awful lot of corn, you'll see corn prices go up because of scarcity. If you then have a supply shock somewhere, say in Canada or in the US or in the Soviet Union, you're going to be faced with the same problem. The problem is partly what your previous answer was with respect to biofuels. The problem is there is not enough agricultural land set aside for the changing demographics globally, and especially within emerging markets. You've got an emerging middle class growing in China and India and across the globe, and that means more mouths to feed. So it's still a supply and demand issue.
Okay, Ms. Burrell, you wanted to talk about biofuels. How do you balance feeding people and controlling CO2 emissions?
Well, I think it's absolutely critical to look at how do we better balance our food and our energy needs, and biofuels as a center point. But I think it's good to put that within the broader picture of a very serious agricultural challenge to meet demand for food, feed, and fuel in the context of a changing climate, which is driving the weather shocks that we were just hearing about, and the reality that oil is finite, and so far biofuels have been a false promise, that in fact they have not been reducing greenhouse gases in the way that we had once hoped, nor have they been providing the energy security that many nations have been especially invested in, including the United States.
But according to the US,
countries.
According to the US, sorry, excuse me, jumping in here, the US representative who's going to the G20 meeting says that biofuels are a tremendous job creator. So doesn't that justify it?
Actually, no. We find that once you move beyond the estimated job creation that has been linked often to biofuels and especially incentives for biofuels, and really dig at those numbers, that what you find is that they're highly exaggerated. The reality is that there are very tight corn supplies. In fact, we are one harvest away from disrupting our corn pipeline in the United States, so there's huge demand for food, feed, and fuel. Corn farmers are going to continue to farm even if we lower some of the artificial demand for biofuels. So when you really want to look about jobs in the United States and how they would be impacted by scrapping subsidies and mandates, you really should look at the ethanol processing plants, which are on average only employing about 45 people per plant. So when you look at the jobs that are really impacted by biofuels specifically, not including every corn producer in the United States, then actually you get a much smaller number of jobs. And what we are finding is that there is enough incentive for ethanol production through rising oil prices and a growing demand for biofuels in many different sectors, that we don't need artificial market incentives like subsidies and mandates to drive that production, because those artificial incentives are also part of what is contributing to food price volatility.
Okay, it's quite interesting that US policy ensures 15% of the world's maize is diverted to engines, even at times of severe food crisis. The grain required to fill the petrol tank of an SUV with biofuels is sufficient to feed one person for 1 year. I mean, that's quite extraordinary, isn't it? Mr. Abbasian, how do you think climate change impacts on rising prices? Oxfam predicts that it'll help double the food prices by 2030. Do you agree with that?
Well, yeah, I mean, climate and agriculture, obviously, they always been with one another. And now climate change is also not new, but the kind of climate change we're going to see is certainly going to cause more problem and more uncertainty, unpredictability with the weather. And as Oxfam report had said, and also FAO's long-term, medium-term projections, 2050-80 shows, we are going to see areas where, in fact, today are heavily densely populated and are more or less self-sufficient in food. Let's say India, for example, or Bangladesh. These are countries which will have major problems in the future. So we need to have actually mechanism in place. Whether or not we'll be able to actually change the pattern in the climate change is questionable, but I think we cannot wait for that. We have to actually adjust our own production systems so that at times of difficulty, which may be just around the corner, we will be able to cope with that problem. One thing I would like to mention is that, in fact, in our recent study with the OECD, the FAO OECD Agricultural Outlook, we showed is that, in fact, production, if you look at the next 10 years, that was also mentioned earlier, we're seeing a deceleration in the growth in world production of agriculture to about, from about 2.4% in the past annually to about 1.7. Now, this is really your fundamental reason for problems in the future. Consumption is increasing because population is growing, and what is happening on the production side? We see a deceleration in growth. So this is a major problem. Another problem is the yields. When you look at the corn price today being actually above wheat, that tells you something about what's going on in the market. And that really has to do with the way that the improvement in the yield have been rather modest, whereas consumption is just increasing year after another. And if you look at the yields, if you just get something like a 5% decline in the yield in the next, let's say, or in the next couple of years, the impact on actually the price of grains could be as much as 25%. So we are very exposed to climate change and to weather shocks, and unfortunately it's not something that's going to go away without some fundamental changes in production systems.
Now, speaking about solutions to this problem, the FAO Director General Jacques Dove has said that joint action among governments is still needed to reduce price volatility and limit its impact on developing countries.
The key solution to the problem will be boosting investment in agriculture and reinforcing rural development in developing countries where 90% of the hungry people live today and where population is expected to increase by 47% over the next decade.
Mr. Hewson, what sort of impact do you think this will have on economic stability and economic instability?
I think it's going to have a significant impact on economic stability. I mean, we've already seen this year with the unrest in Tunisia and the unrest in Egypt because of higher food prices, of the effect that higher food prices can have on the inner workings of economies that are really sort of on the borderline or on the cusp of the poverty line. And, it's something that really policymakers need to get a grip with. And I think it's very simplistic to blame speculators for that. Governments have a part to play as well. And, by all means have transparency with respect to exposure, with respect to commodity price inflows and outflows. But you really need to address the actual underlying problem and not the symptom. And I think that's really what governments have been historically bad at.
Ms. Prell, I should imagine that governments are pretty worried about the political impact that this is likely to have. In 2008, we saw those riots on the streets, and as Mr. Hewson was saying there, I mean, this played a big role in what we saw in Egypt and Tunisia. What are they preparing for?
I think it's that fear about the impact of rising food prices on food security and the repercussions that can have for political stability and economic recovery that certainly is motivating the G20 focus on food prices. But I think there's sort of a critical opportunity that the agricultural ministers would have this week to put forward a meaningful action plan that could really touch on some of the underlying causes as well as forecast how we can address symptoms of the problem. But the challenge is that there's also a lot of political pressure at home and entrenched political interests that could keep us from having actually that meaningful action plan. So what I'll be looking for in the next couple days to come out of the agricultural ministers meeting, a scorecard perhaps you might say, is do they just have rhetoric about boosting agricultural production and public financing for smallholder farmers to adapt to climate change, as we've talked about a little bit earlier, or do they actually put something behind that rhetoric in terms of public financing commitments, enhancing commitments made in the past, as well as fulfilling the promises that were pledged in L'Aquila and in previous G8 and G20 spaces? Will they only hint at biofuels, or will they actually follow the recommendations of the FAO, the World Bank, the IMF, and many other organizations that have said scrap mandates and subsidies? And on food reserves, for example, which could be something that could provide an immediate support and help in the context of a looming food crisis, will they only ask for a study, or will they actually have a meaningful response and commit to support regional creation of food reserves?
Sure, we certainly look forward to that. I think we're so used to
in the next couple of days.
I think we get sadly so used to all these promises, all these pledges with very little follow through. Mr. Abbasian, what sort of impact are you seeing on the ground when it comes to rising food prices, considering that the majority of poor families spend 80% of what they earn on food? How does this affect their lives? Does it mean that they take their children out of schools, they don't get the nutrients that they require?
Well, I mean, you answered it yourself. That's what it is. And if today the problems in the North Africa, obviously they're of political nature, but I think that if the food was more affordable, you would certainly not have had such a fast transition and changes taking place. So it is really a problem that have to be addressed. You know, if you're talking about 1 billion people today going hungry, the question is, this 1 billion are going hungry even when prices were much lower, let's say last year. So it's not that for them much has changed. We probably just added to the number of the hunger. And the second problem is that people, I mean, often in the West or in the industrial or urban centers, we could think, well, prices is high, I'm not going to restaurant, or I'm going to perhaps to buy less meat. But here we're talking about a good portion of the world population actually living on 1 meal a day. So for them is like cutting that 1 meal a day, which means certainly more problems ahead. So this is the kind of a situation we are in, really. That is, there are a big and growing number of people who simply are losing access to food.
Part of that is because since prices never fell back down below the heights that they had risen to in 2008, since they didn't go significantly below that starting point, a lot of families that we talk to in communities where we work in ActionAid across 50 different countries are saying that they've already exhausted their coping mechanisms. In many cases, they've already given up the meal or taken their children out of school or incurred more debt, worked more jobs. And so the latest rise in prices is having a bigger impact because those coping mechanisms have been exhausted. And the estimates so far of what we have seen from the latest price rises have been from the World Bank, for example, that about 44 million people have fallen into extreme poverty because of this latest round of price rises.
And who do you think the big winner is in all of this? It's not very hard to guess, is it?
Well, I don't think really when you're talking about, you know, people going hungry, there are winners. I mean, you talk about speculators. Speculation is a very, very small part of financial markets.
Including morals that go with that.
Well, yeah, I mean, obviously you've got the ethical considerations with respect to that, but I think there are a lot of things that you could call ethically questionable, you know, sort of investing in cigarette makers, investing in, you know, sort of arms dealers or arms companies. You know, there are, you know, financial markets aren't about making moral decisions with respect to where investors put their money. It's a free market. But, you know, what I would say, and I'm sorry to keep harking on about it, governments have a really big part to play, and for quite some time now we've heard a lot of G20 meetings where words have basically been not matched by deeds. And the fact of the matter is there is not enough agricultural land being set aside to cope with the increasing demands and the growing global population. And you know, you can sort of you can target speculators all you like, but it doesn't address the underlying problem.
Mr. Abbasian, if I can ask you very briefly to respond to this, is there any country that is doing it well? Is there a government that is some sort of shining light in all of this?
I'm afraid that I cannot think of one shining one. Countries collectively over the last few years seem to be paying more attention to it, even in Africa, I would say, and in definitely Latin America. But still, I think there was not really, up to about 2008, even the previous price rise wasn't convincing, I think, to many governments that these high prices are going to stay. I think that one thing we will learn, hopefully, is that now they do.
Okay, well, clearly that's all going to change. We look forward to seeing what comes out of that G20 meeting this Wednesday. Thanks very much to our guests, Mr. Bolreza Abbasian, Mari Brill and Michael Hewson. And, of course, thank you so much for joining us here on this edition of Inside Story. We welcome your comments and suggestions. Please email them to us at insidestory@aljazeera.net. Goodbye for now.